market just wrapped up its third straight week of gains. The PSEi rose 2.3% to close at 6,411. Market breadth was positive as gainers outnumbered losers 138 to 132. Value turnover improved to 6.4 billion pesos. On paper, the mood looks bullish. The peso is now at an 8-month high. Foreign investors are back buying in, and US equities are rallying. But beneath the surface, the story is more complicated. US markets surged last week. The S&P is up 2.9%. The Nasdaq is up 3.4%. Thanks to a strong April jobs report, easing trade tensions with China, and strong big tech earnings from Microsoft and Meta. Although this looks good, the problem is this rally may not be built on solid ground. An immediate reversion to a bull market in global equities led by the US still feels like wishful thinking. This is because outside of jobs, US economic data has been less than perfect. Consumer and business confidence are weakening, for example. The Fed is still laser-focused on inflation, meaning aggressive rate cuts are off the table unless things get worse. In fact, traders now expect the Fed to resume with rate cuts in July instead of June. Add in expensive valuations of the US market and unresolved global trade tensions, and it's hard to justify going all in on this market recovery. Locally, it's not exactly great either. First quarter earnings are mostly in line. That means fine, not fantastic. PNB surprised to the upside with profits up 15.7%. But this was largely because of trading gains, gain on asset sales, and lower provisions. Net interest income increased by a more modest 8.7%. Union Bank and Aboitiz Power, on the other hand, disappointed. Aboitiz Power in particular saw profits fall 40% due to plant outages and higher costs. Union Bank's profits fell by 28.8%. Even companies that did meet expectations, Meralco, SM Prime, China Bank, Metro Bank, and Robinsons Retail, faced growth constraints. Meralco's first quarter core profits rose 10.8% to 11.2 billion pesos, but core net distribution revenues grew by only 1.4%. SM Prime's first quarter profits rose 13.3% year-on-year to 11.9 billion pesos, as its small segment saw earnings grow by 13%. However, residential take-up sales remained disappointing, falling by 56% to 11.6 billion pesos. China Bank's first quarter earnings were up by 10%. However, earnings growth would have been faster if not for the steep drop in non-interest income and the 16.5% growth in operating expenses. Metro Bank's first quarter profits were only higher by a modest 2.5% to 12.3 billion pesos, which was hardly impressive. Robinsons Retail's first quarter core profits inched up by only 1.7% to 1.1 billion pesos as the 6.7% increase in operating expenses largely offset the 4.2% growth in revenues and the slight improvement in gross margins. A few more notable stories. ASEN sees slower earnings increase for 2025 but robust growth for 2026. According to COL's power analyst George Ching, net income growth will slow down this year due to the outage of a major wind farm. Given ASEN's latest guidance, it will most likely miss his double-digit earnings growth forecast. This, coupled with its planned stock rights offering, will negatively affect sentiment for the stock in the near term. BSP forecasts April inflation to remain benign, settling between 1.3% to 2.1%. This is largely due to easing prices of rice, fish, fruits, vegetables, favorable domestic supply conditions, lower oil prices, and the peso's appreciation, partly offset by higher electricity prices and LRT1 fare increases. The Philippine Statistics Authority is scheduled to announce April inflation on Tuesday, May 6. Consensus expectation for April inflation is 1.8%, which is the same as March inflation. Benign inflation will help support the recovery of consumer spending this year. It will also give the BSP room to further cut interest rates, which will help boost economic growth. Finally, the government is scheduled to announce first quarter GDP on Thursday, May 8. Consensus forecast for GDP growth is 5.7%, according to Bloomberg. Hopefully, growth does not disappoint. So while the market had a good run this week, we remain skeptical. As such, we would like to remind investors to avoid getting carried away by the market strength. This is not a market to chase. The playbook for active investors: buy on weakness, and sell into strength. If you're looking for a stock that hasn't run yet but could play catch-up, MONDE could be it. Consumer stocks have largely outperformed the market since Trump announced reciprocal tariffs on April 2. While the PSEi index is now higher by 2.6% since Liberation Day, consumer stocks that we cover are up by a faster median rate of 5.9%. This is not surprising since companies catering to the local market will not be directly affected by tariffs. Falling inflation and election spending are also expected to boost domestic consumer spending growth this year, benefiting consumer companies. Despite the favorable backdrop, MONDE has lagged its peers, rising by only 3% since April 2. However, we think there is room for it to catch up. Like the other outperforming consumer stocks, MONDE is quite defensive as it sells consumer staples like instant noodles, and it derives the bulk of its revenues from the Philippine market at 75%. Although its meat alternative business continues to suffer from weak sales internationally, MONDE's consistent cost-cutting measures should help contain losses. MONDE should also benefit from higher margins given falling prices of wheat, palm oil, and sugar, which are among its major raw materials. For the year-to-date period, prices of the said commodities are down 4.5%, 5.3%, and 10.7% respectively. The stronger peso should also help. As of this writing, the peso is trading at 55.58, the strongest it has been since September last year. Finally, valuations are very cheap. MONDE is currently trading at only 13.4 times PE, a steep discount to the 16.9 times median PE of consumer manufacturers we cover. Capital appreciation potential is also significant relative to our fair value estimate of 13.3 peso per share. For the said reasons, we think MONDE can catch up with other consumer stocks that have performed well since Liberation Day. Before we wrap up the show, we would like to remind everyone to stay sharp, stay selective, and as always, invest intelligently. If you found this market rundown useful, hit the like button and subscribe for more market insights. I'm April Tan. Thank you for watching and see you again next week.